So, the other part, so to step back here, now I'll get into the, what happens if you have negative equity, or negative equity in an entity. That is not totally in and of itself a big issue, but if you're looking and trying to compare, you want a place that has equity in there. The key to facilities such as this are occupancy and being able to continue to provide the services and continue to upkeep the facility in the condition it is when people are looking to move in here. We all can look around and say, this facility looks great, but if we looked around here and the panels were falling off the walls and the carpet was torn up and you drive in the outside and you say, gee, this looks a little bit disheveled, for lack of a better term, you say, well, is this where I really want to move? I really want to pay whatever the number is to move in. That's a big problem. Now, where is the money coming from and how much money is being put back into a facility to maintain it and to keep it up is a big deal.
Sure. When you say, though, that that negative, you call it negative equity, but
Yep.
I think typically for the not-for-profit they call it a negative net asset position.
Yep.
That in and of itself isn't significant. From an accounting perspective, does that imply impairment? In other words, if that's not significant, then is there any significance to accounting at all? Or is it not meaningful? And does it mean that future residents will have to subsidize the past residents?
Short answer is it means for the most part, the latter. And from an accounting standpoint, you can have negative equity, negative net assets, whatever you want to call it. The other big piece here is you have something called the future service obligation at the bottom. Future service obligation is an actuarial calculation. It's an accounting calculation, financial calculation, with the input from actuaries. What that means is you look at every contract that's sold that the facility has. And you look at the age of every person in there. And this is where the actuaries get involved. And we all have a tag on us saying, when's our expected end of life. So they look at everybody and they say, okay, here's, and the contract back here, what that contract says, the responsibility of the owner is to provide the care, provide food, meals, whatever the contracts say. So you take those contracts, match them up with the people, and you actuarially say, okay, I got to provide for the next 12 years for a roof. And this is what it's going to cost from an entity standpoint, looking at your current cost, and they estimate, and you estimate 3% increase, whatever the number might be, and you say, okay, on the other side, to offset that, I have several things. One is I have the entrance fee that Ruth paid, moving in here, sorry to pick on you, and I have the monthly service fee that Ruth is paying, and I'm going to be able to increase that 3%. So you have the cash inflows, if you will, and you have the cash outflows to provide that service over that period of time. And you add that up for all 300 people that are in Stone Ridge. And if that number is negative, on the balance sheet is a liability called future service obligation. And what that means in accounting parlance is that your rates that you charge to move in and your monthly rates aren't working right now. So they're going to have to increase. So future residents, or the current residents in the future, there's two pieces, current residents in the future and future residents are going to have to pay more to make all that stuff work. That's the hard, cold facts of how it all works. So if you have a facility that has a future service obligation, that to a large extent is a red flag. And the accountants look at that and say that's somewhat of an issue. But you also have to look at, okay, you also have the theory of going concern, and that the entity is going to be around and you're going to continue to do all this stuff. And you could have a negative net assets or negative equity. As long as you can finance it and you have people moving in, it all can work just fine.